Hey traders, Raghee here. Welcome to Charts and Coffee for Tuesday, September 21st. So we had a heck of a move yesterday. We're all kind of waiting with bated breath for what kind of reaction we're going to see following yesterday's sell-off. On Friday, and by the way, let me make it really, really clear because I don't ever want folks thinking, okay, I'm not really sure which side of the equator, the bullish or the bearish hemisphere you're on, Rog. I am still a bull, just not as widely across multiple indices and sectors. The idea is that where we have still bullish bias, which, by the way, I wanted to put this on the screen here today because being bullish, which is what I am, does not mean I have to buy. It just means I can't short. And I think another thing to add to this before we jump into the questions is that broken trends, excuse me, broken trends are distribution. Now, I don't know how many of you are familiar with Wyckoff's work or Charles Dow, who is really the foundation of this work of market trends and things like that. But distribution is that choppy market that happens after a trend is broken. It can really happen at the bottom of a downtrend or more commonly at the top of an uptrend. So distribution is still, so we have broken trends as distribution. And this cycle, you can call it a stage, you can call it a phase, you can call it a ham sandwich. I don't get hung up on the lingo of trading as long as we understand what it means. This behavior, let's put behavior because that says everything you need to know. This behavior is still carrying a bullish bias. And so if you say, well, Ron, what do I do if I'm not buying the dip, right? We don't go right to sell the rip. Remember that. What we do is then we start to look at oversold buys, right? Oversold buys and distribution are sort of the dip or the retracement in a trend. Same idea. Where is there support that I can confirm via price, via indicator, via volume, and take advantage of that? Now, all throughout this conversation, we have to remember that tomorrow is FOMC. And I have a different take on what the FOMC could do because, there's been a lot of discussion, I think, around Barkin, Rosengren, and even Powell himself about the holdings that they have in the market that seem to have, I know it's a complete coincidence, it really is, that it's the same positions that benefited from the Federal Reserve monetary policy. So, shocking as that is, I couldn't even do that with a straight face. As shocking as that is, all of a sudden now they're talking about unwinding their positions. I think it would be very, very bad. It would be a bad look if now on Wednesday they announce taper. So I'm wondering if some of the shenanigans surrounding what has now been revealed is going to prevent the announcement of taper, which, by the way, there's not expectation for taper built into the market until November, right? So what do we know is most likely November, 15 billion per meeting. If it doesn't start sooner than November, if it's not more than 15 billion and it's not more often than per meeting, the market has pretty much digested that, right? Okay, so with that being said, I want to be really clear. This dip, by the way, I know it's a heck of a dip. That first step was a Lulu, but it does sync up with that rhythm of about, interestingly enough, 28 to 30 days between retracements. I don't know what to make of that, but I think it's pretty interesting. All right, so welcome. I see some folks still logging in. Welcome to Charts and Coffee. Let's get into our questions. Hey there, Steve. I just gave you a thumbs up because I know you're going to be awesome today. Well, I hope I haven't disappointed. Thank you, Steve. I appreciate that. Thanks for smashing the like button. I do appreciate that. All right, so type in your questions as always. We'll be going until 9:20, and then I will see you all in the options room for the first hour, and I'll also see you in the futures room. And we're going to take a look at which trends are intact. But we're going to whip out the old day trading playbook and take a look at what kind of intraday setups might be forming this morning when I'm with you all. So let's get to some more questions here. Hey there, Christian. What do I think natural gas's next move will be? Seems production is being restored. Well, I think that production restoration narrative is clearly one big part of the narrative. The other narrative, when it comes to any commodity, right? It's always going to be two things. One, production, right? Production, which leads to supply and demand. So production would be, well, the perception of increased supply. The other conversation is demand. As we go into the winter months, do we see the EIA increase the heating degree days? Do we see that forecasts are suggesting a mild or a more harsh winter? Because that's going to affect natural gas. It's not just heating oil that moves according to some of these forecasts, these weather forecasts. So, with that being said, let's take out that narrative, right? I don't want to call it news or fundamentals, just take out that narrative. What do we have in terms of the trend, right? Let's just look at, see, remember this, price action will reflect things that we don't even know. As a retail trader, as someone who doesn't spend all day looking at parsing through all the minute details of natty gas, the widowmaker as it's often known, um, I'm not going to be privy to every little nuance of what's happening with production and transportation and storage and Russia and demand from Germany and whatever's going on. But I do know that the people who do know that are placing their bets. So there's a basic understanding. This was something I was taught very early in my career. This might have been one of the first things my first mentor drove home to me in the late 80s, which is chartist. That's what he never liked the word technician because he felt that technicians imply too much adherence to indicators. So he said chartists, which is really a study of price action. Chartists believe, and I think a lot of you are probably chartists with a supplement of indicators, right? Price comes first. So chartists believe that the news, right, whatever is known out there, is already discounted into price. In other words, we accept that there is a myriad of things that we do not know, but it's factored into price. And what I do know is factored into price is a pullback. And I do know that that pullback has been able to maintain an overall uptrend. So if I know that we've pulled back, that we're still in an uptrend, and it's double green, I mean, that's where I get the justification, the 8, 13, 21, 34. That's where I'll say the dips are going to be viable. The closer we can get to those three right now, green dots, which is the 21 propulsion, the happier I'll be. The closer we can get to that 50% retracement of this last major move, top line of the wave, the happier I'll be. And that's where I think we can engage a little bit more confidently, and I would say with a little bit more size, the long side of this market. All right. So I hope that helps. And this isn't just for natty gas. This is for any market that's pulled back suddenly. And you ask yourself, well, what's the structure of the market? Structure always comes first. All right. So moving on. Thank you for the question. Prabish asks, since all the indices are below MTD and the VWAPs, right? The anchor. For day trades, I'm only looking for short. Now, if you took the playbook, and even those of you that didn't, there's a number of things we look for. What is my directional bias? It's really neutral. It's really neutral. I won't say that I'm short biased. I won't say that I'm long biased. Yes, the VWAPs are indicating that we're below two very important volume weighted average price, VWAP. However, at the same time, I'm going to ask myself some other questions. I'll do a one-day gauge. I'll take a look at the weekly. So these are things I can do before the bell rings. Remember, there's 5 to 6 things that are daily time frame analysis that I can use to determine where my bias will be. It's turnaround Tuesday. Not that that's a setup, but there's that probability, possibility out there. And we are below yesterday's close. So it's a little bit of a mixed bag. I'm going to see it's a little bit of a race this morning to see who gets attention and control of flow first. In other words, will I get a V-score low? For those of you that are not familiar with the V-score, it's a tool that I created to study standard deviation of volume weighted average price. Does that go to the low side of the market first or the high side? Which extreme do we hit? Do we hit an HPMR, another tool that I created looking at volatility analysis? Do we hit the upper end of the range or the lower end of the range first. So it's going to be a little bit of who kind of gets there first, who kind of controls the psychology. Now, as I look at my charts at the moment on my other screens here, I have to say we're probably, although we're still 19 minutes from the open, we're probably looking at a potential buy. And that's kind of where I'm leaning. And some of this is going to be flavored by my preference to be long the NAS and the S&P, NAS mostly. And I would say if there's a place that you're open to potential shorts, let it be markets that are more related to the Dow. It could be XLI, it could be IYT, because remember, the day trading playbook isn't just about futures. Although we take a index sector stock sort of top-down approach, remember that laggy, weak sectors can be shorted if the setup is there. You know, the IYTs of the world, the Jets of the world, the XLIs, there's some possibility there. So two-way trading, yes, for the Dow, most likely, probably still leaning towards bullish on the S&P and NAS. So Rob asked, what are we drinking today? Right, if this wasn't called Charts and Coffee, that could cause some ruckus. So today we got the Kraken. I'm releasing the Kraken. And today we are doing, what did I grind up today? It's a good question, Rob. Oh, I ground up something called Power Button, which is a coffee from out of Austin, roasted out of Austin. Trish here in my office discovered it for me. I love it. And it's one of the rare coffee blends that's based on an Ethiopian bean, which is probably my favorite Ethiopian coffee. Probably me and Lefty. I don't know how many golfing fans out there following Lefty, Phil Mickelson. He kind of went on this coffee bulletproof-esque kind of, you guys saw Lefty at some of the latest tournaments, right? So yeah, he's a big fan of Ethiopian too, which actually was a problem because I couldn't find any darn Ethiopian for a while. He caused such a rush to pick that up. But yeah, we're doing Power Button from the folks over at Superhuman this morning. Ground that up. All right. So thank you, Rob, for the question. Got to talk a little bit about coffee and Charts and Coffee. All right, Michael, XLU. So now we're wandering into the more defensive corner of the market. And generally speaking, I got to love that 200. Look at there's two things happening right now in XLU. And again, when I say defensive, I mean, if we're going to see weakness in tech and financials and healthcare, basically the sectors that are heavily weighted within the NASDAQ and within the S&P, if we're seeing fear, where we hide out within equities, right? I don't mean fleeing to yen or dollar or gold or bonds, but if we're going to hide out within equities, we're usually going to do so in staples and in utilities. I would say, Michael, I actually like NEE a little bit better than XLU. NEE is a number one weighted stock within the XLU, and NEE is also holding its wave, or at least 55 propulsion in a much clearer manner. However, XLU just bounced off the all-important Transcends technical analysis indicator, the 200 EMA, the 200 propulsion here, has just bounced off that. As long as we can keep north of the 200, there's generally going to be sort of a bullish outlook on, I believe, on the market, on whatever market is still north of its 200. All right. But I would probably be a little bit more inclined to go with the boat of NEE, the individual heaviest weighted stock, versus the tide of the XLU. So thanks for the question, Michael. Hey there, Deborah. How are you? BLDR. All right. Is this something y'all are looking at in the mastery? BLDR. So if we look at Builder's First Source, and then let's do one other thing as we take a look at Builder's First Source. Let's also look at where BLDR is within the passive investing, the ETF universe. The ETF universe has been helping me build my watch lists and my relative outperformance since '08. And it only gets better and better and better. And when we take a look at BLDR, really nice boat within the home builders tide. This is another example similar to Michael's question. Deborah, I know you know this. I'm just kind of getting the group all on the same page. You look at XHB, you look at that home builders ETF, and then you take a look at BLDR. And you say, well, that's some relative outperformance there. So, Deborah, I'm assuming you've gone through um, the holdings, and this is where the relative outperformance is amongst what? Floor and Decor, Tempur Sealy, yeah, Builders First Source, Carrier, Johnson Controls. So if you've gone through that list, by the way, XHB, unlike ITB, is not a high concentration weighted ETF. So BLDR may not be as influenced by the XHB as stocks within the ITB would be. So I like it a lot. Nice pullback. I'd like to see it hold a green grab. It seems that we're doing a pretty admirable job of that right now. And then, yeah, I like the long. I like the long a lot. Good stuff. Um, so let's see. Next up is, what do we do with bonds? What do we do with bonds? All right. So, well, let's take a look at ZB and ZN before I just sort of knee jerk go to TLT, right? So ZB, now this is where we have to acknowledge this is chop, gang, and we're duking it out at the 200 EMA. So, if you think about a certain battleground, if you will, as to who will own the flow, the momentum, the structure of the 30-year, which is the ZB, take a look at where we end up, north or south of the 200 propulsion, which is the 200 EMA combined with an 8 exponential cross, or the first of the year anchored VWAP, which you can see has actually been even more important than the 200. So I know a lot of people will keep a 200 on their chart, but also put that first of the year anchored. We anchor our VWAPs. We do not use the rolling variety. A VWAP is better than no VWAP, but an anchored VWAP is the best way to go. You always want to anchor your VWAPs, anchor to the first of the year, and you'll notice that's been in play more accurately, much more acutely than the 200. So I'd say moderately bullish, right? And I am bullish because the trend that preceded the chop has been trying to grip, right? The traction's trying to be bullish, trying to really organize bullishly. But we're in chop right now. Take a look at the yellow lower row of the JT multi. So I am bullish, but it's hard to call this a dip because we're no longer in a trend. So that's where we go back to broken trends or distribution. And this behavior is still carrying bullish bias, but we look for oversold buys, not dips, right? And dips are getting so maligned because look, the meme of a dip sort of now has, unfortunately, diluted the fact that really a dip should be a retracement that occurs in an uptrend, and preferably not one much deeper than a 618 golden mean retracement of the previous last major move. What is the move that we're retracing? So dips have become just anyone who just jumps in and randomly buys a market after a sell-off. That is not a dip. The precursor, the prerequisite to a dip must be the trend. So I hope that makes sense. And I like the long side, but we've got to wait for the lower end of the range, Miles. So good stuff. Gold, right. Amy, I'm really interested in gold. Technically, we had a long trigger yesterday, right? And so this trigger is exactly what we did back in here when I bought 1740. It doesn't look maybe similar at first blush, but what this is I love this candle. Learn to recognize minor lows and highs and inside days. If you know an inside day by its Japanese candlestick name, Harami, if you know it by some other name, all it is a candle that sits within the range of another. Maybe you're an NR4 fan, as am I. Narrow range 4 needs an inside candle. Learn inside candles. They are absolutely the gift that keeps on giving. And they're so elegantly simple. They say so much about psychology, especially when contrasted with a large move and then boop, inside day. So yesterday, the buy triggered as we took out the high of the inside day. And just like that, I am out of time. Thank you as always. Yeah, I got a couple questions. Will my class be? So yes, if you're on the Countdown Trader, countdowntrader.com, you probably got an email from me. My dear friend, Toby from Anderson Advisor, I've been doing business with them for years. They've been teaching me about structure and smart trader tax. I mean, I'm no specialist in this. They do it for me. And gosh, they've been God, over 20 years now. So I saw them at I saw them at a seminar in California years ago. I'm talking back in the late 90s. Anyways, they've been who manages my takes care of my bookkeeping, has created all my entities, and I trade through an entity. He's going to talk to you guys about that tonight. So if you're making money as a trader and you're trying to find a better way to manage that, that's who's been doing it for me for decades. So that's tonight. Yes. And I believe it's simplertrading.com/tax, I think is the link. So yes, that will be recorded. And if you've registered for it, they will send you out the recording as we do with all of our webinars. It will absolutely be recorded. Toby teaches a lot. So bring pen and paper. It will probably go, he's going to get into a lot of detail. He always does. I know Toby well. He just brain dumps. So definitely you'll want to check that out. Okay. So thanks as always, gang. I'll see you all in the options and futures room for the open. Well, right now. Okay. Be good to each other, gang. Take care.